This has been a long time coming, guys. I'm interested in trades again. After this long downtrend, specifically Gala Games has hit a strong support. I'm interested in Gala Games now, but there's a couple of things that need to be met, a couple of conditions before I can enter the trade. But I'm going to show you step by step exactly how I'm playing it and what I'm doing next. Okay, Gala Games. Why have I picked Gala Games and why am I interested in Gala Games? We're in a downtrend in Gala Games. We've been in an accumulative phase now. An accumulative phase, guys. Let's measure this. Remember, the bigger the base, the higher the space. So how long has this accumulated phase been? It has been 1,019 days. We've been in this trend and we've been respecting this trend for 1,019 days. Why is that important? We're going to talk about that very shortly. So we're in a downtrend. We're in a downtrend. This is the bottom of the range. We know that this is the max pain. This is, if we went further down, this is where we're likely to hit 0.012. We're currently trading at 0.02295. Now, this is not part of the trade, but I just want to zoom out and show you from an investment perspective where the next level of resistance is on the macro. Next level of resistance is this shelf here, guys. That shelf here is sitting at 17 cents. So the bigger the base, the higher the space. Once we've been in a range for over 1,000 days, once you break out to the upside, expect volatility, and I would expect little resistance all the way up to 16 cents. That's a huge, huge, huge pump from where price action is now. However, is that the trade? No, that's from an investment perspective. So we've been in this range for such a long time. We need to respect the range. The range has been over 1,000 days. So there's a high probability that every time it hits a bottom, it's going to hold. Every time it hits a top, it's going to hold till we break out to the top. And then we can look for projection levels, i.e. 17 cents on a higher time frame. So how big is this move? Why am I interested? What I'm going to do is I'm going to stick in a fixed range volume profile. Now, why is this important? This is going to give me the area of the most traded volume within this range. And if we're below that, that's going to act as resistance. If we're above that, that's going to act as support. So this is going to be a good sticking point. So I don't know what this is going to show, but if we just go at the start of the range all the way to end of the range, and look at this, guys. So you can look at this. This is the area of the most range, the range of most traded volume, this line here. So you can see how price is reacting at this level when it's below and when it's above. And we're currently just above. So we need to hold that level for now. Now, what we're doing is I'm waiting for the break here. Why am I waiting for the break and why is the break significant? Because once I've got a break, that's indicating that the bulls have got momentum. And once the bulls have got momentum, that's indicating that there's a high probability that there's a low in. Why is that important? Because it means that you can protect yourself with a limited amount of capital at risk. So let's have a look at a couple of hypothetical scenarios on this. You have a break. Let's see, how big's the break? First thing that you're doing, actually, guys, you're waiting for a break and you're waiting for a close. Why is the close important? Because you could get something like this where it pushes up and then pushes back in trend. And then the trend isn't broken. The bulls haven't got momentum. The bears have regained control. And there's a high probability you're going to make a move to the downside. So the break and the close is really important. Now, the break and the close can happen a few different ways. You could get a volatile break like this. What does that do? When you're adding in your risk to reward tool, guys, you're adding in your risk to reward tool. What that does is it increases your risk because you're looking below the swing low and it reduces your reward. So how can you play these type of moves? We talk about the breaks, we talk about the retests. Now this is hypothetical, it might not play out like this. If it did play out like this, and you think that you haven't got a good entry, you're waiting for the pullback, this previous area of resistance, you'd expect to act as support. Then what that does is it brings your risk down and it brings your reward up. People think about this area all the time, guys. Flip your mindset. This is the important thing, your risk. The more you reduce your risk, the more chance that you've got at increasing your reward. The more you increase your reward, the more chances that you're able to lose without having an impact on your P&L. Because just an example, guys, just an example, here's one. You got 5-to-1 risk to reward. So that's a 5-to-1 risk to reward. If you can risk one part to every 5 for reward, and you win one time out of every 5 trades, what's that going to do from a psychological perspective, guys? That's going to give you a win rate of 20%. So if you had a win rate of 20% with a 5-to-1 risk to reward, what would that do? That would make you break even. So you need one trade out of every 5 to win, and you would break even. Now, this is where the powerful tool comes in. If you won 2 trades out of every 5, that would make you profitable. Now, if you carried on doing this time and time again, and you honed down on the strategy, step-by-step rules, and you managed to get 5-to-1 risk to reward, and you managed to get 2 out of 5 right, That's a small win rate, guys. That's a 40% win rate. You're losing 3, you're winning 2. If you manage to get that 40% win rate with a 5-to-1 risk to reward and done that consistently, guys, that would be a money printing machine. It's easier said than done, but you need to be thinking about limiting your risk, maximizing your reward, and then when it comes back down and stops you out, guys, because it stops you out, it's a probabilities game. You win, you lose. You need to ensure that you've got a higher risk to reward, and then you need to ensure that it works for you. So 5.18 risk to reward if it happened like that. Could play out a different way. Could play out like this. Little break. In an ideal situation, you get a little break, which is backed up by a bit of volume. You can add the volume indicator on there. Volume's an important thing, guys, when you're looking at breaks, because if it's backed up by volume, it shows that the break's real. So you can add your volume on there and you can have a look. And what you're looking for, guys, is a big volume spike. When you get a break, you want a big volume spike backed up by the break, confirming this is probably the low. Bulls have got momentum. You can reduce your risk, you can increase your reward, and then when you're wrong, you can live to fight another day. So, what is the actual increase from where price action is now to its previous high? That's 170%, guys. From a trading perspective, even a spot trading perspective, that's pretty good risk to reward considering a high probability move once you've got the break here. So remember, guys, it is just probabilities. Make sure that you protect yourself, make sure you reduce your risk, and then the reward will look after itself. Take care of yourself and goodbye from me.